Hello, this is Randy Lindsay with Hawkeye Traders. I want to put out a quick video on the most recent updates in the markets. If you look at the daily S&P 500 market, you can see there's a pretty good correction that came in the market once it hit 3,200 and it came back down well over 200 points. Pretty interesting to see that, but we say all the time that Hawkeye points the way and shows you where the price is going to be going by looking at the volume. And looking at this price action, I see no indication from volume, at least on the daily, that this was going to be reversing and tanking as much as it did. Looking at the volume, you can see a really nice pattern of building and buying volume coming up into this. The only thing I could have, in hindsight on the daily chart, saw was that the price bar was closing 2 days in a row less than the open, but there is still a clear sign of buying pressure coming in at that point. When I see the close is less than the open and I see the bar still painted green, I still bullish and I'm still looking for that price to continue to go up. If you go down to the 1 hour chart, the 1 hour chart is a very good indication of what's going on intraday. The daily bar is a good example of what's going on longer term, but the hourly gives us a really good heartbeat of the market intraday. Looking at the intraday market on the 6th and the 7th of June, I saw a change of character. Here is the first time where I'm starting to see very large volume selling pressure greater than the buying pressure that's coming in. And here you can see day after day from the 2nd of June up to this point, you got increasing selling pressure, and this selling pressure is significant compared to the buying pressure that's there. And this is the first time that we're seeing a marked selling bar that's much greater than any of the buying bars that are coming in. Notice also from this point forward, the magnitude of the volume decreased as the price came up into overhead supply. Then you start to see, look at the color change, big color change. Most of the price change that came from this point occurred overnight. Very low volume. And look at the huge downpull, extremely low volume. Look at that. This market went down big on extremely low volume. That's just not characteristic of a market. There's no reason for it to do that. Markets generally do not go down on low volume. So something's going on, and this does not look like normal price behavior. The failure right here to produce a new high and no buying pressure coming back in would have been an excellent sign that this market was starting to tank, and a break below this low right here was the first indication, again, for anybody that was trying to go short. Hawkeye on the hourly chart showed the initial short here and then right here again, right under the 3,200 mark. So following the daily chart, we saw no signs, but following the hourly chart, we can definitely see weakness and we can definitely see ways to take and profit from this downturn. So if you got caught by this, if you got hit pretty hard on that move, looking at the longer term charts, I feel your pain, I understand, but the Hawkeye is still a tool that you can use just a little bit differently as the markets change to help you to stay safe. Get your very own copy of Hawkeye right now. Click the link below and find out how you can trade the Hawkeye way.